Are we really going to get that first hike in over a decade at a time when the data doesn't really add up for so many people?
Well, it's a tricky one, obviously, but I think the problem is that the central bank has taken us way down the path. Their markets are now pricing a rate hike with a probability of 90% this week. And having taken us down this path before and disappointed us, now I don't think the bank can afford to not deliver this time, because obviously the hit to sterling would be quite significant, and obviously the last thing the Bank of England wants is a weaker sterling, because that further boosts inflation. And I think you also have to look at this in a wider context. I mean, admittedly, a rate hike doesn't sound like a good move at a time when the economy is slowing and we've got so much Brexit risk. But equally, it's an interest rate at the moment of 0.25%. The economy is still growing at a rate of around 1.5% per year. So I think if you look at it in levels terms, you can justify a rate hike.
One and done, Peter?
One and done for now. I think the bank will probably sit on its hands for most of 2018, if not well into 2019, because I don't think it wants to be too aggressive. I think it just wants to take back the rate cut that it put in place in the wake of the EU referendum in June of last year.
Peter, we mentioned the banking story a couple of minutes ago. UK consumers have been on an absolute credit binge at a time when wage growth isn't improving, on a time when the economy is looking a little bit softer. What's the story there? What's going on with the UK consumer loading up on credit when the Bank of England is trying to steer them the other way?
Well, I think that is another of the reasons why the bank wants to raise interest rates a little bit, to send a shot across their bows. Because as you rightly point out, real wage growth has fallen quite significantly over the course of the past 12 months. And it's interesting, I think, to look at the strength of GDP or lack thereof, because the real surprise, I think, has been the extent to which consumption has actually slowed and the extent to which investment has held up rather better than we might have anticipated. But I rather suspect that this support for consumption, such as it is, has come from an increased volume of lending. And I think there's every chance that if the UK consumer were to be less willing to extend credit, then you might see an even sharper slowdown in consumption than we're currently expecting.